The Allstate Corporation with the ticker symbol ALL is possibly one of the best stocks for 2025. In the short term, a period of 6 to 12 months. Now, full disclosure, I borrowed this number from Ed Alpha Picks because Staking Alpha is a program that actually picks out the best stocks, and they also have a demonstrable outperformance. They're doing really well, I have to say. And the wall discount link can be found in our YouTube description. So definitely check the description on YouTube. Click the link for the discount with more information about Alpha. You can try it for free for 7 or 14 days. Their thesis for the Allstate Corporation seems really interesting. They also indicate that a strategic turnaround plan has been implemented and taken place. As a result, the short-term profits have unexpectedly increased a lot, and this seems to keep going. They also have all sorts of other factors in their numbers. Great. Well, a very detailed analysis and a number of I will share interesting features of this stock with you. First of all, the current price has risen significantly to 119. Somehow, Morningstar indicates that the fair value estimate, according to them, is still around 140. That's why it gets 1 star. A big deviation from other analysts. Normally, about 20 analysts give a price down, 230. Most of the time, those analysts are pretty close for the short term, but definitely not for the long term. Morningstar looks more at the long term, of course, when it comes to intrinsic value. That's really for the long term. That 140 seems really low to me and doesn't add up. Are we looking at the price correlated with future earnings? And the estimates from analysts, which by the way also can't be right, but here it has definitely started to work. Allstate's tournament plan is working. Management is doing good business, makes more profit, and that profit could continue into 2025. Moreover, it's an insurance company. Insurance companies, you really have to be very poor at management not to be able to make a profit. But of course, it goes with cyclical movements. And a well-known example is Berkshire Hathaway. Now, the PI ratio from the past 5 years was only 10. So I've actually set it to 20 years now. And that seems realistic to me, 12 for an insurance company. And if we then take growth into account for the current valuation, then it could be above 10% annually for the coming years. And especially for 2025, it could very well outperform. But in the short term, is there maybe still a chance to wait for a better entry point? Now, factor analysis indicates a strong buy, actually one of the higher scores at the moment for Allstate. That's also why Seeking Alpha chose this stock on Alpha Pick. If you look at the valuation, it's just in line with the sector median. But for example, EV to sales has come down a bit and price to sales is also relatively cheap. Price to cash flow is only, well, that's not very high. By the way, they pay out some dividends, namely 2%. The market cap is 50 billion. No specifics regarding cash and total debt. Growth seems interesting. Revenue is expected to creep up by 10% next year. EPS growth is already being estimated very high, so we should take that with a grain of salt. And if we look at profitability, it can really only go up from here. That's also the buy thesis. And so for 5 years, the profit margin was only 4% and has now risen to 6.7%. 2% doesn't seem like much, but for a company with 50 billion in market cap and a lot of sales, burger value and with a lot of sales, because the price to sales is almost equal to 1. So then you also have 50 billion in revenue. Then it's a 6% profit margin. If it rises to 7 or 8%, that's quite a significant increase. Return on equity has also increased remarkably for the upcoming period, and there it's 60%, as well as the return on capital. So apparently management is doing something very good here. So very interesting, still worth investigating further. 1 in the depth, 6 in the depth gives a hold rating. Hub price track is really still higher than the current price, namely also 222. And if we look at the whole bless you technical analysis, we see that the price has decreased percentage-wise at around 7%, so not very much. It could be that he finds some sort of support level around the price of a 191. It might drop a little further to level 175. That's this level right here. I don't think it will drop further because the valuation is already relatively cheap. There seem to be very positive developments regarding profit growth. So that means the company is going to become cheaper in the short term. And as a result, more investors will find this stock attractive. Also for the very long term, as I already said, the business model of insurance is just interesting. And there could be significant declines. Cyclical declines, of course, with significant setbacks like natural disasters and all sorts of other issues. But look at the strategy of Allstate. Did you get it right? Be aware of the risks and invest a relatively small amount that you can afford to lose to, potentially keep your earnings limited.